But let's welcome on board Kunal and ask him about how is it that you deal with the day after. Kunal, hi, good morning. An over 500-point fall, what happens next?
Yeah, it depends on what statement comes next.
I know.
So I think it's...
Fortunately, I believe that they've gone cold at least for the next few hours. So 4 hours of trade, Kunal, before at least hopefully 4 hours of trade before any statement comes through at the very minimum. What do you do in the next 4 hours?
See, I think now when the market prices in that kind of a risk, so for the last 2-3 months, the markets were stable because the risk was not priced in. Markets sort of assumed that maybe this kind of a news flow would now start to abate. I think we were going through a phase when the ceasefire, etc., was announced and the markets were going to a slight better confidence zone. But when risk gets priced in, the markets ebb off back again. The resistances or the estimated targets, they drop down. Markets come back towards a moderate or neutral zone. Volatility index rises, so the markets have to price in that additional rise in the VIX. And that creates a lot of adjustments in terms of variety of strategies. So I think we are now in that phase, maybe over the next couple of days, that the markets would probably try to just price the risk, come back into a balanced mode, maybe 24,000 mark, which was the equilibrium point for the markets. We would try to just about come back to that kind of a zone. We were heading towards 24,500 mark, but with this pricing of risk, I think we should now stabilize just closer to the 24,000 mark.
Kunal, what we saw yesterday was short, stop loss triggers which came into play actually. I mean, the aggressive call writing that happened even immediately after the statement, and then a stop loss, especially on those stocks where the margin trade book is very heavy, whether it's Reliance, Infosys, TCS, HDFC Bank, and these 4 or 5 stocks also were the biggest contributor to the Nifty fall yesterday. How do you look at this entire technical factor as well?
So I think what happened yesterday was, you look at the net advance decline ratio. There were 2,600 stocks more than on the declines and 600 stocks approximately on the advances. So a market breadth, which was almost net 2,000 stocks on the negative side. And then when you look at the impact of stocks, rightly as you mentioned, Reliance was down 2% plus, HDFC Bank was down. We were at point where 2 days back we were on the verge of breaking 850 mark comfortably for HDFC Bank, and now we are back again to that 815, 820 levels for the stock price. So with this sudden kind of a withdrawal of positions, it's going to be difficult for traders to try and come back into that higher quantity or leveraged buying. So what happens is when you see a margin trade or derivatives positions being cut after such kind of a move, the markets take some bit of time to try and come back to stability, because it's not immediately that the next following day, if the news flow starts to be a little bit more better, just slightly better than what it was maybe a day back, that the markets would try and come back to that original position size. It takes some bit of more time, some bit of more confidence for the stocks to, or for traders to try and build up positions into the stock. So my sense is that over the next 2-3 days or remainder part of this week, as well as start of next week, the markets would try to reprice the risk, look at which sectors and which stocks were the ones which could probably be, at the cusp of maybe a turnaround. I'll give you an example. 7-8 days back or 10 days back, L&T was the stock which was almost at 42, 4,300. That stock prior to this news flow had already started to go into a correction. So if you remove yesterday, almost 6-7 days of correction had already happened for a stock like L&T, which was a large cap stock which was apparently doing very well post the March lows. So it's difficult to try and time it that which stock would come back into a revival phase and which stocks are the ones which could come back into the leadership phase. So the markets will take some time to stabilize. That's where I think we'll get our cues.
And also, Kunal, I think as an investor, what you would want to know is, will the market react in the same way as it did from the March lows? Will it be the same set of leaders? Will it be the same very swift 8% rebound which we had up until yesterday morning?
Doesn't look like, Aisha, because, so for example, when we were at 108 on crude, assumingly that, if the markets realize that there could be some sort of stability, we would come back to maybe 75 or 85. Now we are already at 75, 80. You don't have too much room for the crude prices to...
We're at 78.
78. So we have
almost
the band of 75 to 80.
Yeah.
So you don't have too much room for the crude oil prices to fall down further, assuming because the markets will reprice this risk in terms of news flow back again. So the stocks which were more crude sensitives, the OMCs, the likes of Interglobe Aviation, pain stocks, etc., they would not lead the rally now in the next phase, because there is no major room for the crude oil prices to head lower at the current juncture. So you'll now be dependent on other set of stocks. So maybe the auto stocks, maybe some bit of financials, banking, maybe some sort of a reprieve in the IT names. So there could be a new sector addition which could happen, but I think it's better to wait and watch.
So 24,000 level, is it going to be breached today or is it going to be a range bound trade today?
I don't see that breaking of 24,000 happening today because it's very, very rare that you see such. So in fact, I'll give you a stat. 30%, the India VIX jumped up 30% yesterday,
yeah.
which was far bigger than the actual war which was announced on 2nd or 3rd of March for the market. So when the markets opened with a gap down opening. And whenever the India VIX has risen by 24-25%, the next following day, the India VIX has risen by at least another 4 to 5% further. So even though it's been a marginal drop on the indices, but the slight addition in VIX tells you that the markets take some time to try and rebalance.
Okay, so what stock strategies would you have today?
So I'll go with few stable stocks. Bajaj Auto is apparently something which has been doing very well for itself. The stock has already been beaten down over the last 2 months, 3 months from 11,000, 12,000 levels to sub 10,000 mark. So apparently at this 10,000 levels, I believe that the trade setup is quite attractive for Bajaj Auto. Would look at a buy with a target of 10,600, stop loss at 9,950. The second would be a buy on Exide Industries. Apparently this was one of the few stocks in the mid-cap category which was doing very well for itself. The stock closed almost at 420, 425 plus marks. So would look at a target of 440, stop loss at 415.
Okay.